5.6 billion in cash. Biogen is just buying their way out of a pipeline drought.
I actually don't hate it. They desperately need that nephrology footprint.
Oh, come on. $41 a share is a massive overpay. You always defend these biotech premiums.
It's not an overpay if the rare disease math pencils out. But if you want a truly massive number, McCormick and Unilever are cooking up a $20 billion flavor cartel.
A flavor cartel. I love it. Do we hit the pharmacy first or the grocery aisle? The rundown. 80%, 80. That is how many deal makers are telling analysts they expect M&A volume to outpace 2025.
I read that survey, and I am formally calling nonsense. Deal makers are always optimistic. It's literally their job to say deals are coming. If a banker tells you it's raining, check the window.
Hey, I resent that. Sometimes we just look at the radar, and the radar is showing massive mega deals actually closing. Look at the consumer space right now. McCormick and Unilever are combining their food businesses. We're talking a $20 billion flavor juggernaut.
A juggernaut of mayonnaise and garlic powder.
Do not disrespect the condiment empire. The strategic fit is obvious, but it's not just consumer. Private capital is aggressively deploying at scale. Carlyle just took a majority stake in MAI Capital Management, valuing the wealth manager at over $2.8 billion.
The wealth management roll-up play is getting so crowded. Everyone wants those recurring advisory fees. But Carlyle paying $2.8 billion means they're pricing in some serious multiple expansion. I want to see the earnout structure on that one.
You just hate joy. Speaking of joy, the beauty world is completely losing its mind today. Estee Lauder is reportedly in active talks to buy Puig.
The Spanish fragrance house, that would be a massive defensive move for Lauder. They've been bleeding market share in prestige beauty.
Exactly. A huge swing to get their groove back. And speaking of regional swings, Grab is reportedly circling Food Panda's Taiwan business. $600 million carve-out. I actually love this. It completely locks down their Asian delivery footprint.
You love a $600 million carve-out in the lowest margin business on earth? Nate, come on. Food delivery is a capital incinerator. Buying regional market share right now is just throwing good money after bad.
It's about consolidation, Maya. You survive by being the only app left on the phone.
Or you die slightly later than the other guy. I'm watching the B2B tech stuff instead. CapVest officially closed its Stada acquisition, and Options Technology just bought Crossveil to supercharge their AI cloud offerings for financial institutions. That is where the actual margin is.
Fine, keep your enterprise cloud margins. I will take my high-end perfume and delivery noodles.
Enjoy the indigestion, but we need to talk about the real massive swing today. Biogen just dropped $5.6 billion in all cash for Apellis Pharmaceuticals.
$41 a share. It's an incredibly aggressive growth play in rare diseases.
And the footnotes on this nephrology pipeline are fascinating. The big one.
$5.6 billion in all cash. Biogen is not messing around anymore.
They're definitely not messing around. But $41 a share? That is a very expensive way to buy your way into nephrology.
You have to pay up for rare disease assets, Maya. It's the only place left with real pricing power. Apellis gives them an immediate immunology moat.
A moat, sure, but let's look at the desperation here. Biogen needs a pipeline fix yesterday. They're writing a $5.6 billion check because their own internal R&D engine is sputtering.
Oh, come on, sputtering is harsh.
Is it? Look at their recent track record. Buying Apellis is basically Biogen admitting they need external life support for their long-term growth targets. They're paying a massive premium for someone else's homework.
Spoken like a true skeptic. But put your banker hat on for a second. Okay, my old banker hat. If you're Biogen, you have the cash. You need rare disease exposure. You buy the best asset on the board and you don't blink at the premium.
I'm blinking at the premium, Nate. $41 a share in an all-cash deal means you are taking on all the execution risk.
Which is exactly why the all-cash piece is the real flex here. They're saying, we have the balance sheet. We don't need to issue stock. We just want the asset. Boom. Done.
Boom, done, until you read the integration risks. You always do this. You see a big cash number and you start planning the victory parade.
Victory parades are fun and usually catered.
I guarantee you the corporate development team at Biogen is not having fun right now. Apellis has great science, but scaling a nephrology drug globally under a massive corporate umbrella? That's where deals like this go to die.
See, this is why people think you hate M&A.
I love M&A. I just hate paying full retail price for a potential headache.
Apellis isn't a headache. It's a turnkey rare disease franchise. And honestly, with over 80% of deal makers saying they expect even more volume coming next year, Biogen might look really smart for locking this down before private equity swoops in.
The PE guys are definitely lurking. They're deploying capital everywhere right now.
Exactly, which brings us to a space I know you actually do love.
Don't say it.
We need to talk about McCormick and Unilever building a global flavored juggernaut.
I am still trying to figure out what a $20 billion flavored juggernaut actually looks like. Voices.
So I'm reading this industry survey this morning, and it says over 80% of private equity and corporate deal makers expect deal volume to outpace 2025, 80%.
I read that same report and I actually laughed out loud at my desk. Who exactly are they surveying? Because if you ask a bunch of bankers if they expect to do more deals, of course they're going to say yes. It's literally their job to manifest deal flow.
Oh, come on, it's not just blind optimism. The market watchers are right about the sharp rise in mega deals. We're actually seeing it. Private capital is aggressively deploying right now. Look at Carlyle dropping $2.8 billion on MAI Capital Management.
Wealth management roll-ups are the definition of safe money right now. That's not aggressive deployment. That's Carlyle buying recurring revenue because the tech multiples still scare them.
I completely disagree. They are absolutely doing tech. Options Technology just bought Crossveil specifically to push AI into financial institutions. And the big strategic buyers are throwing massive weight around. You can't ignore McCormick and Unilever combining their food businesses. $20 billion in combined revenue.
Right, but spices and mayonnaise aren't exactly high-risk digital infrastructure. Though I will admit, the beauty sector rumors actually have my attention.
The Estée Lauder chatter?
Exactly. Active talks to buy Puig. If Estée Lauder pulls that off, they're building an absolute monster of a fragrance house.
See? The animal spirits are back. Even Grab is reportedly circling Foodpanda's Taiwan business for a $600 million carve-out. People are writing checks.
I'll believe the 80% number when I see the actual closed deals, not just the letters of intent, especially with regulators still breathing down everyone's necks.
Which reminds me, we need to check the tape tomorrow on public storage.
Yes, $10.5 billion in all stock for national storage affiliates. That regulatory filing is going to be fascinating to tear apart. Spill the tea.
I am telling you, Estée Lauder buying Puig is exactly the kind of vanity megadeal bankers dream about.
Vanity is the right word. Look at Estée Lauder's recent quarters. They are bleeding market share in China, and their big solution is to buy a Spanish fragrance house.
A highly profitable Spanish fragrance house? Puig owns Charlotte Tilbury and Rabanne. They have the exact premium edge Estée lost.
Sure, but at what multiple? Puig just went public. The premium Estée would have to pay to take them out right now would be borderline offensive.
You are just allergic to glamour. Sometimes you have to buy the shiny object to fix the narrative.
I am allergic to bad capital allocation, Nate. Integrating a massive family-controlled European fashion business into a struggling American corporate machine, it is a culture clash waiting to happen.
Fair enough. If you want something less glamorous, Grab is reportedly circling Foodpanda's Taiwan business.
A $600 million carve-out. I saw that.
Food delivery consolidation is basically just watching companies fight over the last slice of cold pizza.
Cold pizza with terrible unit economics. But a carve-out actually makes sense here. Foodpanda's parent desperately needs cash, and Grab needs geographic density.
I just love how 80% of deal makers are out here claiming M&A volume is going to completely outpace 2025, and their big master plan is trading regional food delivery territories like pieces on a risk board.
Oh, come on. Private equity is aggressively deploying into real assets too. Look at Carlyle taking that massive stake in MAI Capital, $2.8 billion. Mega deals are definitely back.
Speaking of mega deals and aggressive growth plays, wait until we look at what Biogen is doing in rare diseases. $5.6 billion in cold hard cash.
$41 a share. I read the Apellis filings this morning, and the strategy here is fascinating. Tomorrow's radar.
I am refreshing the regulatory tape tomorrow specifically for the public storage deal. $10.5 billion in all stock for national storage affiliates.
You really think regulators care about self-storage? I am much more interested in checking for a counterbid on Aurinia and Kezar Life Sciences.
Oh, come on. Self-storage is basically real estate infrastructure now? But fine. What about the gossip? Are you buying the Estee Lauder and Puig rumors?
A massive beauty giant buying a Spanish fragrance house? The perfume margins are incredible, but the integration sounds like a cultural nightmare.
That's exactly why it works. It's pure vanity M&A. My banker spidey sense is tingling.
Your spidey sense is literally just you reading a rumor blog. I'll bet you a coffee that Grab carving out Food Panda's Taiwan business for 600 million closes first.
Deal. I take my coffee exactly like my M&A market right now. Overpriced and highly aggressive. Talk to you tomorrow.